All right. I think we're recording.
Yeah, we are. I can see it.
Good. We got confirmation. Everett, how about you? Are we recording?
I do see recording.
Are
All
you
right.
coming to us from the Bond Street headquarters, Everett?
Absolutely. Look at that. Right
All
behind
right.
me.
You really faked me out with the virtual background there.
That's
It
actually a
looks
sign in our
good.
office.
I know.
It looks good. I should have done that so no one can see my animals running around, but it's all right.
Yeah.
People
So,
like pets.
Everett, thanks for coming on with us today.
Absolutely. Thanks for having me. I definitely appreciate you guys asking me.
I know we're used to
Yeah.
seeing you in the office every day, and it's been weird not seeing you like 5 days a week.
Very, very weird. It's going from seeing hundreds of people a day to seeing like nobody a day and
I
being
know.
confined to just my house. And it's not as fun as I thought it would be.
No,
No, it
like the
got
first
old
week
real quick,
before.
right?
Oh yeah. Going into I think this is our, for Bond Street, our like 7th week of doing it. And I can't wait for it to be over.
That's crazy. Yeah, and obviously most people watching this, or a lot of people, are past clients, especially probably know who you are. But Everett from Bond Street, and we wanted to have you on today to just kind of get an update on how things are going with the mortgage market in general, and so how are you and Bond Street doing these days? What's going on with 7 weeks of staying at home?
Absolutely, absolutely. Yeah. So everyone at Bond Street is doing well. Thankfully, all our friends and family, knock on wood, are healthy and safe. We're still chugging along and closing deals. So me personally, we're still staying busy any way we can with deals that are currently in the pipeline, as well as we are still getting some new deals. So that's always a good thing, especially in these difficult times. And we're reaching out to other centers of influence that we can team up with just to create that teamwork down the line after this is over. Bond Street as a company, we're in great shape. Our CEO, because that was one of our worries about like a week or two into this when everyone was not really sure what was going on. We're very liquid. We're very cash positive. So there's no issues of anything negative happening with Bond Street Mortgage. And James, he's going all in. We actually just hired 2 new underwriters that started about a week and a half ago.
That's awesome.
Yeah, and we hired another processor that started, I believe, this Monday, and I'm pretty positive that we're looking for another processor as well. So we are stacking up because other companies are folding down. We're taking all those good qualified people, adding them to our staff. That way, once everything gets back to normal, that there's not going to be anything, and we're going to hit the ground running.
That's awesome. So you said you're doing new deals now.
Mhm.
What's different? I know we talked a few days ago about one of my clients that was potentially pulling the trigger on something, and you said a 60-day close. Is that accurate? Just to build in a bit of a buffer?
Yeah, I always present, because even if they have like a contract close date of like 40 days, because you guys know at being agents that, hey, you guys want to close ASAP, that way you can get the deal done onto the next one and get that check. Obviously, we're going to do what we have to do in order to close ASAP, but myself and Bond Street Mortgage we like to under promise and over deliver as
Yeah.
opposed to over promising and under delivering. Because if we say we can close in that 35-day, 40-day period, and it takes 50 to 60 days, then I look like the bad guy because I said that we can do it. So I prepare all the parties involved that we're looking between like a 50 to 60-day closing. And then obviously if we can close quicker than that, then everyone is happy as hell at the end of the day.
Yeah.
Yeah,
I think
it's
there's a
always
lot of
been
things there that
something
we have to kind of build in a buffer.
that
Yeah.
both Meg and I love about working with you guys too is that, because you do most of the legwork for the loan up front with the client, it has always been, that you definitely, have under promised and always over delivered on our clients.
Absolutely. And that's what I want to hear, because the end of a mortgage process, it couldn't be either such a happy time or such a bad time because of one reason or another. And I always prepare, even with like closing costs, as an example, as you guys can both attest to, that we overestimate our closing costs. That way that when we get the final CD at the end of the day, that 9 times out of 10, they're a couple $1,000 lower than what we estimate. So that way the client is, oh, wow, that's awesome. And I thought we had to bring 12. Now we only have to bring 10.5. As opposed to me estimating, oh, you only have to bring 8, and oh, now I got to come up with $2,500 extra.
Yeah.
So I'd rather leave a positive spin at the end of the day as opposed to a negative taste.
Absolutely. And that's super important now with a lot of things being uncertain, making sure that cost in line is really important so you don't have a crying client a week from closing. but
Exactly.
I've never had a problem.
And kind of transitioning off of that, talking about costs and what to expect coming up here. I know, Meg, you've had somebody reach out to you from your database talking about the possibility of needing to take advantage of. Although to me, I think there's a lot of risk involved, and I'd be curious to hear your perspective, Everett, on mortgage forbearance and like what are people's options right now if they've been laid off of their job, if they're just having a tough time making ends meet because their hours have been rolled back. What does that all look like, and what should people be planning for with that?
Yeah, absolutely. We've got that question a million times, as you guys can imagine, from not just agents, but clients and friends and family. So they really did it. The government did a pretty poor job of putting this out because it basically made it seem like it was mortgage forgiveness, which we all know one way or the other, the bank will never do a mortgage forgiveness and they're going to get their money one way or another. So what the mortgage forbearance is truly meant for is somebody that was affected by the COVID virus. So whether you came down with the disease and you were out of work for X number of days, or you lost your job, whether you were laid off or you were furloughed. So that way you are going through the tough times. So the one thing that I always tell anyone that asks me, what should they do with the forbearance? I always give them this. I always say this: if you can make your mortgage payment, make it as long as you can, because all these banks and these servicers, whoever's servicing your loan, they all have their own separate guidelines and they're all very vague. So we can tell you as much as we know, but we always push you to talk to your servicer because they're going to be the ones that are going to grant you that forbearance. Now, the reason why I say make your payment as long as you can is because from what we've heard, mortgage servicers are doing one of three things. So let's just say they give you a three-month forbearance where you don't have to make your mortgage payment for 3 months. Mm-hmm. So what they will do is that, number one, they can either push back all the repayments, and then at that fourth month, you're going to have all 4 months of that mortgage payment due at full.
Immediately.
Yes, immediately.
And I think that's going to lead to a lot of people being in a really bad spot. And I think it's one of the things that, the consumer doesn't necessarily understand when they're entering into some of these agreements.
People thought that it just goes to the end of your mortgage, which would be kind of lovely, but that right now is not being offered at a large scale, correct?
Correct. I mean, I don't even know if anyone is really doing that, even though they might say they are. I mean, I don't trust anything with that because who really knows what's going to happen?
Yeah.
And let's just say that like payment is $2,000. So 4 payments of that's $8,000 would have to be paid at full. And if you can't do that, then that's going to present a tricky situation for you.
Chances are, if you can't make your mortgage payments now in 4 months, like what are the chances, unless you just buy a lottery ticket, which actually I think is a great idea right now. Who's buying them? I should have told the world that. But I think you have to be realistic in the sense of, if you can't pay your mortgage now in 4 months, are we all going to be in a position where we're going to have that liquid money up front ready to go?
Exactly. Because who knows what's going to happen if we're going to be, hopefully, like we talked before we started recording, hopefully we're back in the next couple of weeks to somewhat normalcy. But at the end of the day,
the other side of the coin is once summer's over, we hit the cool weather. In the winter, we might be back in a similar position. So
exactly.
I do think that personally, I think the banks and the mortgage company, the mortgage holders should be doing a better job at helping us, because this just kind of came out of nowhere. And at the end of the day, like in my opinion, that's why they charge interest. They are making their money on us regardless. Mm-hmm. But I definitely think right now, like you said, Everett, they put that out there like it's going to be a helpful program. And in my opinion, I think it's extremely dangerous to do a forbearance right now, given we have no idea how things are going to shake out. In 4 months, we might still be in, who knows?
Yeah. So, I mean, besides forbearance, Everett, I feel like before you were mentioning something about other options. Like, are there other options for people out there?
Yeah. So, I mean, the other thing is what I've heard that these services are doing is, so again, if it's a 3-month forbearance, if after that 3 month, that their 3 months are up, what they'll do is they'll make it over the next 12 months. So that way it's spread over. So that $6,000 would be divided by 12, and you'd have an extra $500 payment every single month for the next year until you're caught up to being due. Yeah. That's one option. Not everyone's doing it like that, but that's one option that I've heard that some services are doing.
That's what I think my client offered, because at first when I was reading it, I didn't understand it. And I think you just nailed it, that they're going to do a small break of not spread it out then over a longer period of time.
Exactly.
Wow. Okay. That's actually really good to know, because I was having a hard time understanding, because, you know, I mean, we don't do the mortgage business at a level that obviously that Everett does, but we still know more than the average person. So I always feel like if I'm confused, I can't imagine somebody that's not in this conversation every day is feeling.
Exactly. And that's the bad part about all this, because they just threw this out of nowhere basically, and they didn't give any instructions on it.
Any education on it either.
Exactly.
Yeah.
They left it up to the servicer to make their own guidelines.
Yeah.
So that's one of the poor jobs that the government did, unfortunately, because it left everyone up in arms. Because I mean, I've had people that are well off making six figures that are still working that are like, oh, I might try this mortgage forbearance. And like, that's just the complete wrong mindset that some people should have. Because it's meant for, like I said, those people that are actually affected by the COVID-19 virus.
Is there any way you can get denied forbearance?
I mean, honestly, I wouldn't know, because
I would imagine they almost wouldn't say no to you, because they're
Yeah.
making more money and could potentially take your home.
And I
So
think
I'm wondering if they'd even deny you.
bring up there is the fact that, like, Everett, you've been talking about the loan servicer. Like, I know when we're going through a deal, you know, Meg mentioned, like, we know enough about mortgages to have a basic conversation with our clients normally. And we always end up saying, like, if there's more complicated questions, go back to Everett. But in this case, right, you guys are, you know, funding the loan and getting people, you know, pre-approved, doing all that. But then whoever's actually accepting the payment from them on a monthly basis is who they should really be reaching out to.
exactly.
I would say to first explore the option, and before they commit to anything, you know, if anything, then they should come back and, you know, talk to Meg and I, or,
Yes.
you know.
Exactly, because I mean, if they can absolutely call me and pick my brain, but I'm just going to tell them, because I can only say so much, because like I said, the guidelines are still so vague, and it depends on who's servicing your loan right now, that I'm going to let them know that, hey, you're going to unfortunately have to speak with a representative at whatever bank is servicing it right now, and they're going to let you know. And then the other thing too is, like we were just talking about, like, if you're not affected and you're trying to do the mortgage forbearance, we don't know how quickly they're going to be confirming and verifying all these details on if you're actually affected in one way or another. Because guess what? If you're not affected and they do find it out, we don't know what's going to happen, because if they granted you that forbearance. So that's also a risk too that these clients could be taking.
Yeah, I think it's something very serious. So, and that's one of the things that I've always loved about you, Everett, is even before all this pandemic happened, if I ever had a client that chose to use a different, you know, loan officer, that's good and great. But I've always said to them, at least get a quote from Everett. He'll be honest with you. And if he can't beat it, or he thinks you're getting a better deal somewhere else, he'll always be honest. And I think that's something that a lot of buyers are missing. I think a lot of realtors are missing. Having a lender that you trust, that doesn't have what we say commission breath, that will genuinely give advice that's best for the client and not was what's best for you and your personal gain. And that is so rare to find in life, and especially in this business. So I've always appreciated that. And I think it's made me a better agent, and it's made my clients make better decisions. So I'm always appreciative of your honesty and integrity.
Thank you. I definitely appreciate those kind words, Meg.
Always.
And I think that also hits on the fact that, you know, there's such a difference. And Everett, I'm curious, like, you know, we appreciate having you accessible. You're local. We see you during normal times every single day in the office. Our clients, you know, get great access to you, which I think helps through the process, makes things smoother. But also I'm curious, like I was seeing, like I know Chase, I think was the one bank that I read, has now all of a sudden said, listen, unless you're 20% down, conventional mortgage with 700 credit score above, we're not lending to you right now. And so I'm curious, like, what's Bond Street doing with, you know, updating your guidelines on the different mortgage products that you guys have available?
Yeah, so all these banks they're doing what's called the COVID-19 overlays right now. And Chase is being very, very proactive in it, that they're just covering their butts, because those clients that are 700 plus credit score, putting down 20% plus on a primary residence, odds are they're well-qualified borrowers, and they're going to be able to make their payments throughout all this. That's only Chase right now, as far as we've known, and that happened over the weekend. Yeah. So yeah, Chase is under us, and that is somebody that we use. But we also have about like 20 to 25 different banks underneath us that we can sell off to too, that we can do a conventional deal with 5% down, 3% down conventional, down to 680, possibly even 660 credit score. So definitely don't think that because what Chase is doing, that's across the board. So that's just one of the issues with the big banks, because yeah, maybe more of the big banks will take that approach depending on how much longer this goes. But we always are going to have those accessibility to those other banks that are still pretty lenient on what they're going to be accepting.
Yeah, I think that's such a game changer. And also, what are you guys doing FHA mortgages through this? Because I know there was a lot of talk about, some changes to the FHA guidelines.
Yeah, so FHA and VA loans, they're government-backed loans. So they've taken a hit pretty big time recently. So right now, unless you're willing to pay like 2 points, and what a point is, it's a percentage of the loan amount, you're really not looking at a rate better. I mean, you're lucky to get 4.5 on FHA, which, as you guys know, is insane because FHA is usually about a quarter to like 3/8 lower than conventional.
Yeah,
And
wow.
it's not pricing aggressively just because there's so much risk involved in those loans, because obviously being FHA, you can have a much lower credit score. You can put down that 3.5%. You don't have to have that much money in the bank. VA, you don't have to have any skin in the game. You don't have to put down anything. So they're just covering the risk reward factor. So it's really tough to get FHA or VA right now. But I don't want anyone who's a first-time home buyer to think that you cannot get approved for a mortgage because, I was planning to put down 3.5%. Like I just said,
That historically is still a really good rate. I mean, I had clients that were being quoted that a year and a half ago.
yeah,
So it isn't the worst rate in the world. So if somebody absolutely needs to buy now and their only option is FHA, I hope they're not too discouraged by that. Because
so
can't they refi in 6 months?
yes, they can. But
Okay.
we can also do the conventional 3% down programs. So
Yeah.
there's 3 different conventional programs depending on which scenario they fit into that we can do it. So don't think just because, I have 680 credit, I only have 3% to put down, that you're out of the game right now. No, you're not. Not 100% at least, because we have
Yeah.
those options to fit
Yeah.
you into those conventional 3% programs. And then let's just say that you are a case where you absolutely need to go FHA because your credit is 600, 620. Hey, now's the time to work with somebody like us.
I was just going to say that, to fix their credit. Yes.
Exactly. Because let's just say that when I pull the credit, I see it's a 610, and it's because I run through a credit simulator, and it's because you have high balances on your credit cards. I can give you a game plan that way in the next couple of months that you can work to pay down that credit. So that way we can get your credit score up. Or let's just say that it's a severe credit case where you have collections, charge-offs, judgments on it. Even if this was 3 months ago, you weren't going to be able to close on a mortgage right now. So we can put you in touch with our credit repair specialist, who he's the only one that our company uses, and he's an awesome guy. He's what I trust by, just like how you guys love to work with me. I love to work with him. So if the client follows what he says and does what he says in that time frame, whether it's 3 months, 6 months, hey, they're going to get their credit to where it needs to be to get that American dream of owning a home.
Yeah.
I love it. There's always room. I think that's the most important thing why buyers shouldn't put off talking to a lender and reaching out to us, because there are things that we can work on that can be fixable, and sometimes in 3 months. And we all know it's been 7 weeks that we've been stuck in here. Like, it goes quickly. So I think that that's probably, I would say, some buyers' biggest mistake is not reaching out and talking to a lender like you, Everett, early enough that when they are finally ready, they have all their ducks in a row. They have no anxieties. And I know that sometimes these calls can be embarrassing for certain people if they're, maybe not loving their credit score. But Everett, how many times have you said, I've seen worse than you, I've seen better than you.
Exactly.
You don't judge, you don't care, because who cares? We're here to help you get, like you said, the American dream. We're not here to judge you and talk about your finances.
Yeah. I mean, one way or another, you're going to have to clean up your credit. So
yeah, it's going to follow you forever.
Yeah. Like I said, I've seen the worst of the worst. I've seen the best of the best. So at this point, nothing surprises me anymore. So whether you have a 510 credit score or 800 credit score, hey, my reaction is going to be the same. I mean, it's just that with the 510, we got to put some work into it, unfortunately.
Yeah.
But you got to look at it as an investment, because whether it's for a home, a car, a credit card, right now, credit is king. So you're going to have to work on that.
Absolutely. I agree. So where are rates at now? We talked about FHA, but what about conventional?
Yeah, conventional, they're still very, very aggressive. So we're at like in the mid threes. So
Okay.
3.375 to 3.5.
That's
So they're
really good.
still, yeah, they're still almost at the all-time lows that they were about 2.5 months ago. And if you look at the grand scheme of thing, where the Fed rate is and where the 10-year Treasury bond is, they really should be around 3%. But the risk is put in there. The banks are putting in the risk factor in there. So they're building it up a little bit more. That's why we're saying that, like you said, if you are looking to purchase sometime soon, or possibly even debating if you should refinance or not, hey, if you have everything with us, we can put an alert on us, like for a refinance, we can put an alert on your file. That way, if you want to only refinance if it gets to 3%, hey, if we get some
Wow.
good news with this virus and we go back to work, the economy starts to pick up again, hey, we do anticipate rates to lower even more. So
Yeah.
we can get that. Yeah, that's good news for everyone. So we do anticipate them to get lower, and we might test that barrier again for that 3%. So it's definitely worthwhile. I don't think that just
Awesome that you have an alert, Ever. I did not know that. That's
yeah,
really, really cool.
yeah. So,
Automation is a game changer, is it not? I mean, there's no need for you to have to manually check everyone's file. This is a great way that everyone stays in touch. You're going to have to put me and Matt on that.
it makes me look like a superstar and I don't have to do anything. I just got to click a button.
We can always edit that part out, Ever. We don't have to know. I don't have to know.
And I think that's just awesome advice in general. I know like back in early February was when you were like swamped with the refinances going on. And yet I know, Meg and I have been talking a lot about, looking at our business expenses and where can we trim some fat. Like, I think everyone right now should take a look, and if their rate is above 4.5, they should be, at least exploring the idea of refinancing.
If your rate is above 4, or you're in an FHA mortgage and you have good credit, you should definitely look to refinance, or at least just overlook it, because guess what? You're going to save money. You're going to save interest. And then again, if you might have 20% equity, if you had that mortgage insurance, we can remove that. So
that's a big deal. The mortgage insurance is a really big deal.
Yeah, so whether you're just saving it on a monthly basis, or you want to try to consolidate some debt because you have a lot of equity in your house. I'm refinancing somebody that is putting in their entire student loan into it, about like $30,000. So with that, even though the loan amount is higher than what it was previously, they're still saving about $450 a month.
Wow.
I did not know that was an option in life.
Yeah.
We'll have to do a whole different conversation on that.
Oh yeah, we can do that.
I'm pretty sure every single millennial is like, what?
Oh yeah.
And I speak from experience. I already refinanced once with you, Everett, and with the way things are going, I think I'm almost at that 6-month mark where, as long as my home value has stayed about where it needs to be, maybe going through the process again. So
let's get going. Let's get it going.
I want to do a 15-year, you know that, and pay off this house and be done.
Soon. We'll get both of you guys going soon.
Yeah. Well, it'll be my first deal with you ever. I never refied with you before, so it'll be our first one.
Uh-oh.
So I know, Everett, we've taken up a good chunk of your day, and I really appreciate you coming on. We could probably stay on here all day, but
no, I got some cooking to do, so we gotta wrap it up.
Cooking with Meg. You gotta tune in.
Plug for what's cooking with Meg, right?
It's getting set up in the background.
There we go. Any general advice, just tips? I feel like we've covered a lot, but anything that our clients should be thinking about right now?
Yeah. So for the clients, obviously, first and foremost, you got to keep social distancing just to keep safe and healthy. So that's first and foremost. Second is just pay attention, because if you're currently in the process or thinking about making offers, just keep in mind what is going on in the economy and in the world and your job. Because if there's talk around your office that you're going to be getting laid off or furloughed, that's going to put a wrench in things. So you're not going to be able to close on a mortgage if you're currently furloughed or anything like that. So just keep that in the back of your mind too, because right now all banks, including us, are doing even more verification of employment.
I was just going to ask you that. I was like, are you guys ramping up? Because isn't it usually 24 hours before closing when you?
Yeah, so we're doing it. We're doing our normal one, which is once it gets into processing. We're doing another one once it's in underwriting. We're doing one at the day of closing. And then whoever it's being sold off to is going to be doing one, and that can be a week or two later.
So that's what I was reading, that someone got that checked, I think like 4 or 5 business days after closing, and they were panicking, but someone said they're probably selling that loan, so they wanted to make sure you're employed, and if they can't, then that servicer needs to keep it, right? But so that is something that could be interesting. I was reading about that in one of the Facebook groups we were a part of. That they got a verification like immediately after closing.
Oh, it's scary because you legitimately can have a job 1 minute and then be let go the next, or furloughed the next minute. And it legitimately.
One day I was working and one day I wasn't. So.
And it didn't happen to me. It happened to one of my colleagues in the office. We did our verification of employment that morning. Everything was good and dandy. Then the servicer who bought it, or was going to be buying it, did another verification of employment as they were signing the closing disclosures at the closing table. And they found out that, they're being let go. Deal died.
There's not enough booze in the world to coach someone through that horrible moment. That is
definitely not. Definitely not. That's just a punch in the gut for everyone involved, unfortunately. And it's nobody's fault either.
Oh, you can't.
That's the worst thing. It's the best and worst thing because there's no one to point fingers at. So it's the nature of the beast in today's day and age. But so that's just one thing that you definitely have to pay attention to, is if anything's happening with your job and your job security. And then just for the agents, just keep chugging along, because you might not be going out to houses, but hey, you got to stay in sight. You got to keep in touch with all the clients that you have, friends and family, and even other people, other businesses, whether it's mortgage guys, title companies, credit repair, lawyers, anyone that can be a CI, which is center of influence. Keep that going, because the bigger you build your network, the more of a resource you become. And that's just going to help you out in the long run, because that's going to get more referrals and get your name out there to even more people than you think you already are out there with.
I think now more than ever, it's really important for every buyer and seller to work with an experienced agent, an experienced attorney, an experienced lender, because when the market's good, the agents that aren't plugged in, that aren't educating themselves, they can still get the deal done. But the second option like this, and they're not in the loop and they're not working hard in their business, they're not going to be able to advise you on what you're doing. I think now more than ever, if you have a friend that's looking and is using a crappy realtor and a crappy lender and has a crappy attorney, like, you can't afford that right now. You can't.
It's true.
There's too much on the line to be with someone that's not has their finger on the pulse of which, I mean, things are changing hourly.
Exactly.
You have to be on top of it.
And I mean, not just the like this thing, I mean, it's going to weed out the strong from versus the weak, because these weak lenders, these weak agents, these weak attorneys who were in it because they saw how fruitful it can be, hey, they're not going to stick through and try to make it through this, because guess what? This is not a good time for any of us right now, because we were at our peak right before this happened. And we're still busy, but we're not nearly as busy as we were prior to this. So it's definitely going to weed out the weak versus the strong, which at the end of the day, hopefully in a couple weeks, couple months, whenever we get back to some kind of normalcy, it's going to be for the best, because then it's going to be, when you're working with somebody, you're going to see that, hey, Bond Street is still here. Keller Williams is still here. Megan, Scott, Everett. We went through the worst. We've been through the best. Hey, we're still here. And that means something at the end of the day. So it's going to be good for us established people. Let's just say that.
Awesome. I'm excited.
I love it.
Absolutely.
So thanks again for coming on today, buddy. And
Everett, you're the best.
Thank you guys for having me.
Each other in person sooner than later here.
Absolutely. We can only hope. Fingers crossed. Fingers crossed.
All right, guys. Catch you later.
Enjoy the rest of the day.